So yeah, so kind of backtracking a little bit, you know, if we're inputting the alerts, hopefully we all watch the video, Mastering the Trade Alert, so that way we understand how to input it. If you don't, you know, obviously go back and watch that video. Now, step one is obviously, you know, identifying the trade details, the entry price, the action, if you're buying or if you're selling, identifying the stop loss and take profit levels, so that way you understand, you know, what the trade is telling you to do. You never want to go into a trade blindly. You want to understand exactly what the trader is doing, so that way you're mimicking it, you're following it to the T. Cool. Now, step two is assessing the risk to reward in terms of pips. Like I said, pips is how we, you know, understand the movement in the market. So 1 pip up, 1 pip down, right? That's how we understand the movement in the market. So you want to assess the risk to reward in pips, so that way you understand what your risk is and what you're gaining, because you never want to risk too much to gain too little. Right, so you want to calculate the risk. How you're going to calculate the risk is obviously taking the stop loss from the entry price if it's a buy trade, and if it's a sell trade, you're going to do the flip, which is taking the entry price from the stop loss. Now, to calculate the reward, you're going to take the take profit levels from the entry price if it's a sell trade, and if it's a buy trade, obviously the opposite again, taking the entry price from the take profit. Cool. Now let's understand this in dollars, because we have, you know, US dollar accounts or Canadian dollar accounts, whatever it is. Some people may have British pound for all I know, or euro, but we want to understand this in dollars, right? We understand that we have different risk appetites. So traders, the different channels, they have, you know, low, medium, or high risk trades. If your account is not high, I would not advise you to take a high risk trade. It just doesn't make sense. You will obviously run up your margin and you won't be able to hold the trade at all. So if you don't have, you know, more than $3,000 plus, stay away from high risk trades, right? Now, if it's a low risk trade, the stop loss in pips has to be between 0 and 30. Obviously, it's going to be more than 0. Right? But it has to be between 0 and 30. This is what we call a low risk trade. Now, how can we convert let's say it's 30 pips. How can we convert that into dollars? We want to understand what our price per pip is. To calculate your price per pip, you want to divide your account size by 10,000. That's going to give you your allocation size, guys. You just times that by 10 and it will give you your price per pip. So let's say you had a $500 account. When you divide it by 10,000, it's going to give you 0.05 times that by 10, 50 cents per pip, right? Sorry, times it by 100, 50 cents per pip. So that's what 0.05 translates to. So you know that's 50 cents per pip, and you know you're obviously going to utilize your standard lot size if it's a low risk trade. But let's say, please clarify standard lot size. So standard lot size meaning when you do the account size divided by 10,000. Now I know what you mean standard meaning 1.00, but in this case it's, you know, being a low risk trade. So we're going with what it would be if you did your account size divided by 10,000, right? So if you had a $1,000 account, we know that's 0.10. If we had a $500 account, 0.05, $2,000, 0.20. That's what we mean by standard right now. Cool. So if it's a low risk trade, you're obviously going to utilize your standard lot size, whatever you get from doing the calculation. If you have a medium risk trade, you would divide your account size by 2,000 or your standard allocation divided by 2. So if you had a $1,000 account, 0.10 divided by 2 is 0.05, right? That would be your allocation for a medium risk trade. If you're doing a high risk trade, 61 plus pips, your account size divided by 4,000 or your standard allocation divided by 4. If you have a $1,000 account, 0.10 divided by 4 is 0.25. Obviously, you know, 0.0, you will put in 0.02 because you can't put in 0.025. Hopefully that makes sense for you guys. Cool. So understanding your risk to reward in dollars. So if we had, you know, 30 pips, let's say the stop loss on the trade is 30 pips, you're using your standard lot size at, you know, $1 per pip. So 0.10 is $1 per pip, guys. So you would be risking essentially $30, right? Now you look at your take profit. Let's say your take profit was 50 pips, right? But standard low risk trades are usually 20 to 30 pips, the first take profit level. Take profit 2 would be around 40 to 60, I would say. So let's look at it in terms of that. You had, let's say the first take profit was 50 pips, right? So your reward would be $50. So you understand that if your risk is 30 and your reward is $50, you're in a net of $20. So it makes sense to take the trade, because even because of the calculation between the two, you're in a plus, right? Let's say it was the reverse and you're minus, let's say 20 pips. Well, it's up to you to really take the trade. If you really think it's worth it, you could, but just for, you know, playing, is it just me or is the sound has gone really, oh. Okay, cool. So yeah, if you were in the negative, maybe turn your phone up, Rashonda, just turn your volume up, because yeah, I'm talking really loud and my house is very quiet. So if you were in the minus, it would be, it wouldn't make sense, right? Because if you're gonna take multiple trades, you know that you're in the negative for all the trades, so it doesn't make sense to take it. So you wanna ensure that you're in some sort of a plus, especially if you're trading on a low account. You wanna ensure that you're in a plus, because you don't wanna just lose a trade to lose a trade, right? We understand 80% accuracy rate of alertsone, but just to kind of enlighten you guys on how professional traders look at how they take their trades, they want to ensure that they're in plus. So we know 80% of the time the trades are hitting take profit 1. Take profit 2 is where you obviously start to get into that plus. So yeah, it makes sense. I take profit 2 for the trades. You guys know I do the multiple trade strategy, where I take, you know, 2 positions. 1 position would take profit 1, second position would take profit 2. So for sure, I'm always going to be in that plus. Cool. So hopefully you guys understand that. If you guys understand that, just drop a 111. Just really ensuring that you're in a plus to understand that, okay, this trade is profitable. If I have a small account, I know for sure, you know, it makes sense. I'm not just losing too much money to gain too little. Because let's say you're looking at 60 pips as a risk, but your gain is only 20. You're minus 40 pips, and that could be $40 for your account. It's just too much to risk, you know what I mean? At the end of the day, like I said, up to you guys' discretion. You can definitely take it if you choose to, but I'm just enlightening you guys on how to look at, you know, when a trade makes sense for you to take in comparison to, you know, your account. Cool. So we understand the risk to reward in dollars. Like I said, I guess I didn't move to the next slide, but you know, to understand it in dollars, you're definitely you have to understand what your price per pip is. So to get your price per pip is your allocation size times 10, and then you'll see the dollar amount, and you'll be able to understand exactly what I just explained. You know, if it's 30 pips and you have a $1,000 account, it's $30, and so forth and so on. Cool. Multiple positions can increase the risk if the market reverses. Yes, it does. Right, but obviously I'm, you know, monitoring my trades. So if it hits take profit 1, I'm going to cover my account by moving my stop loss to entry, so that way it's at break even. Cool. So that's something that you guys should definitely be doing. I teach this all of the times. Ensure that you're moving your stop loss to break even when you're 10 to 20 pips in profit. Cool. So obviously the last step of, you know, the analysis is to input the trade. So you're inputting your allocation size according to your calculation. Input the stop loss from the alert, the TP if you're taking TP 1 or 2, and then you press buy or sell according to the alerts. Now guys, we understand that we have pending orders in Forex. We got our buy stop, sell stop, buy limit, sell limit, and we're definitely going to be using this in Theta, because you're actually getting 2 trades in 1 alert. Right, so we know our buy stop is placed when you know, the order is placed above price and price keeps going up, right? So you enter, so you see the green line, you enter there. This represents your entry price. The blue dot is where, let's say hypothetically, current market price is, and the market moves up towards your entry price and it keeps going up towards your take profit. Sell stop, obviously the flip side, Blue dot represents current market price, red line is your entry price. So market moves down towards your entry price, your order gets filled, market continues moving down towards your take profit. Cool. Buy limit a little bit different because you're looking in terms of reversals, right? So your order is placed below price, so market is moving down to your entry price, filling your order, and then going up towards your entry price. So this is why I say in terms of a reversal, right? Sell limit, obviously the flip side, order is placed above price, and then price goes down, so market moves up towards your entry price and continues to go down. Cool. So now let's get into how to trade the Theta channel. This is exactly what we're here for. We want to understand how to trade this channel. Even though the channel is in Arabic, the setups are just so phenomenal. I've never seen anything like this. I thought it was something like the sequelizer, which is what I'm doing in my advanced training, but it's so easy. A beginner can really do this, and the consistency of the channel is really good. Cool. Now, like I said, it's very, very simple to understand. You're getting 2 trades in 1 alert. Now, the way how I take this trade is a little bit different from the trader because I want to protect my account. As a trader, I'm very, very conservative. I want to ensure that I'm protecting my account. So if anything should happen and it goes the opposite way, I'm covered and I'm not losing too much. So you're actually getting 1 active trade and 1 pending trade. Cool. Now I'm gonna pull up an example here, so that way we can take some of the trades. Like I said, ensure that you guys have your demo accounts ready. We're gonna be inputting some trades, doing the math. It's gonna be very interactive. So let me just go to my Telegram here, go to the Theta channel, and we're looking at, let's do the most recent alert. It's a GBP JPY. I already put it in on my account. It's actually in positive right now, guys. I'll actually show you this. Listen, when I say this channel, man, this channel is good. It's actually really good. I'm gonna show you guys here. So I'll show you guys here. So this is how I take it. So there's actually 3 take profit levels. I decided to take, obviously each one, and it's already in profit. So we're actually moving towards take profit 1 right now, right? Then I'll obviously go take profit 2, take profit 3. But if it should reverse, obviously below the price stated in the alert, I have this pending order here for a sell. Cool. So let me show you guys exactly how to take the trade. Cool. Let me just share this back here. And I'll show you guys. Cool. All right. So we got this GBP JPY trade here, sent out today to almost 2:30 Eastern time. So what they're really saying here, I'll actually translate it to you. You don't really need to translate it. The setup is always the same, but I'll just for, whatchamacallit sakes. My Google Translate is here. All right, so tech language to English. Cool. So what he's saying pretty much is he is buying at this price. So he's saying the current trend is bullish, right? He's buying at this price, 139.23, and the take profit levels is 139.50, 139.90, and 140.30. Cool. The reversal area, if the trade reverses, right? So reversal area at which the time the buying closes and turns to sell. How you understand if it's turning into a sell is if it on the 30-minute chart. You guys know about the different time charts. You got 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, and monthly. Cool. If on the 30-minute chart the candle closes below 138.8, you're going to put in a sell order with the take profit levels of 138.5, 138.10, 137.75. That's it. Cool. Or if you guys are following along, drop a 111. I don't want to lose anyone here because this is really important, guys. So if you're following along, drop 111. And I hope you guys are taking notes. right? So like I said, we got 2 trades in one alert, right? Now I kind of marked it up to show you guys here, right? So obviously, like I showed you guys, it's in positive because this blue line represents the buy entry, and the candles are obviously above the buy line, right? So we're in positive, right? So we entered here at this candle at the price stated with the exact time. You know, obviously market moves however it moves, but it continues to move up. We're approaching take profit 1, the take profit 2 is here, and take profit 3. But if the market should reverse and come to this red line, we're going to enter a sell if the candle closes below this price on the 30-minute chart. Take profit levels are here. So I always do my little setups on TradingView. I love to use TradingView. You know, this is where professional traders come to do their trade-ins. Definitely get a free account, guys. It's so easy to use. If you guys want to understand how to use it, just, you know, watch some tutorials on YouTube. But I love TradingView. So we understand what the trader is saying, right? So he also, you know, shows his little setup here as to why he's calling this trade. So he's saying, you know, obviously entry is here. Market is, this is where he bought. His take profit levels above, and if it comes down below this line, you know, he's gonna sell with, you know, the different take profit levels. So just like I explained. So if you guys want to go ahead and put that in on your demo. So like I said, I'm putting in a sell stop because if you guys understand, there's no stop loss here. He hasn't provided a stop loss. So this trader is actually watching the charts, I would say every hour on the hour, every 30 minutes. So if you guys want some type of protective measure, what I did, because I do not trade without a stop loss, my stop loss for my buy trade is the entry price of the sell. So my stop loss would be 138.80, right? My stop loss for the sell trade now would be the entry price of the buy. So that's just me, you know, being conservative because I know, you know, 2 trades. I want to be conservative. I want to protect my account. But if you guys do this and it obviously hits, it's not going to be the same thing as the trader because he is trading without a stop loss. So just take note of that, right? So if you want to be conservative, you can put in the stop loss like I do. You know, if it's a buy, your stop loss is going to be the entry price of the sell. And if it's the flip side, you're obviously doing vice versa, right? So we put in our market execution buy with, you know, the take profit levels. So he goes take profit 3, 2, and 1. So if you want to go for take profit 1, you would put in 139.50. If you're going for take profit 2, 139.90, and so forth and so on. And then you can put in your pending order. Let's say if you're not monitoring your phone and, you know, if the trade should reverse, hit your stop loss, you want to catch the sell, you would put in a sell stop. It's always going to be a sell stop. A sell stop at the entry price 138.8, right? With the take profit level stated, take profit 1 is 138.55, 138.10 is take profit 2, and take profit 3 is 137.75. That's all that's to it, guys. Right? But let's do some math. Let's put it into perspective to understand how much you're risking to gain. This strategy essentially makes your trading automated with these levels 100%, because if you don't catch the buy, you're going to catch the sell, right? It makes sense. So if I were you and I have a small account, I will just do take profit 1. We already seen, you know, yesterday there was one that came up for the USD CHF, and it hit the first take profit level 32 pips. This channel has a lot of consistency. We're seeing, you know, it's hitting take profit 335 pips. We're seeing 70 pips, etc. There's just been a lot of consistency on this channel, guys. That's why I decided, you know what, I got to train you guys on this. It makes a lot of sense. If you guys, you know, want to get that manual feel on trading, this is a setup that you can really, really do yourself. It's not as complicated as a Sequelizer, and there's a consistency to it, right? There's also a video here if you guys want an explanation. You know, there's an English version, there's an Arabic version. But like I said, even if the trade is in Arabic, it's still easy to understand because you're just looking at the chart and the numbers. It makes sense. And you can just plug it into Google Translate and you'll see exactly what he's saying. So I can even translate this one here and just kind of show you guys. It's always the same thing. Always the same thing, right? Let's delete this. Right, so in this case, this trade was a sell, and I actually took that and I posted my results. I think I made $150 on just take profit one. So this trade, the USD CHF, was a sell. So he's giving you the sell target, right? Reversal if it's going to a buy. So if it closes above 0.9005, you're gonna put in your buy trade with these target levels. It's so simple, so easy to understand. You don't have to always translate it. You can just really look at the numbers and understand if it's a buy or a sell. But you know, obviously, if you guys want to translate it, go ahead so you can understand exactly what's going on. So let's go back to this GBP JPY trade. Let's just do it in terms of numbers to understand, you know, what we would be risking. Okay, cool. So yeah, you got that. If you don't see the channel, you need to verify or do the / list on your alertsone bot to get this channel. Now let's look at this, guys, in terms of numbers. So I'm gonna do this on a standard allocation for $1,000 account. So 0.10 $1 per pip. Cool. Now we know for this trade, it is a buy, or entry price is 139.23, right? Our stop loss in this case, like I said, hypothetically, 138.80, and our TP1, TP2, TP1 is 139.50, TP2 is 139.90. Now, guys, we're dealing with JPY, so like I said before, to understand the pip movement for JPY pairs, it's a second decimal place. So obviously looking at the second decimal place. Now, who here is good at math? Let's see. What is our risk in terms of pips and what is our reward in terms of pips? Let's see if you guys are good at math. You can easily just punch this into a calculator. Like I said, in this case, it's a buy trade. So here, I'll pull it back so you guys can see. Where are we? So you guys can do the math and let me know. One more, cool. So let's do the math and see, guys. What's our risk? If our entry price is 139.23 and our stop loss is 138.80. Anyone got it so far? Or are you guys shy? Absolutely right. Yep. Our stop loss is 43 pips. Yeah. Now what's our reward? And give it to me for both levels. So what's our reward, guys? Nobody has gotten it yet? Or are you guys just shy? Lethan says he's shy. Okay, so I'll put it back. So hopefully you guys have this kind of written down, so you know what to do to calculate your risk to reward. All right, so here's the numbers again. So I'm gonna give you guys some time to do it. I'll give you guys like 2 minutes. It's really simple, just punch it into a calculator and you'll get the numbers. You guys understand we're dealing with the second decimal place, so you're looking at the second decimal place for the movement in pips. All right, so let's see. So what's our risk? So we said that our risk for the buy is 43 pips, right? You guys got that? Yeah, 43. And the reward is 27, 67, and 107, correct. So Christian got it. Okay, you professional trader, we get it, you know it. Let the new people answer. Yeah, so 27 pips and 67 pips. So obviously we put that in terms of dollars. We're looking at $42 risk, 27 and 67 reward. So yeah, it makes sense, because even if, you know, $20 isn't too much, I would definitely say that that trade is okay to take. So 27 and 67, like I said, we see the consistency of this channel, so take profit 2 is definitely doable. Even if the trade reverses, you're going to hit break even, so you're still somewhat safe. You're still safe, not somewhat safe. You're still safe. So definitely that makes sense. Now on the flip side of the sell, what did you guys get for? So yeah, for sure, I saw someone said the risk is still 43. So 43 for the risk, and then for the reward, what did you guys get? Come on, I want some participation. For sure, I'll explain what break even is. What's the reward for the sell? Come on, guys, we just punch it into the calculator. It's so easy. Like when you do this over and over, you even get the eye for it. I know maybe some of us aren't good at math, but still, you just punch it into a calculator and the number comes up. All right, so you guys are taking too long. The reward is 25 and 70. I guess so, Christian. They really need to watch Master and the Trade Alert video. It goes through all of this, right? So on the sell side, we're seeing a risk of $43. Take profit 1 is 25. Take profit 2 is $70. So this trade, it makes sense. That's why I took it. And you guys seen, you know, I took all 3 positions. You could take all 3 if you want. And you're definitely seeing, you know, the plus on that side, right? And then for protective, you put in your sell stop, with the parameters given, and that's it. You just let the trade run. You just literally let the trade run. So hopefully you guys understand what I mean. We can do, you guys want to do another example? I'm down to do another example. All right, let's do this one. All right, cool. So like I said, this USD CHF1, it was a sell, right? So we got selling at 0.9157. Take profit levels are here. This is a math class that makes you money. Yes. Right, take profit levels are here, and then if the candle closes above this price, you're gonna input your sell with these take profit levels. So let's do our math. So we're selling at entry price 0.9157 with stop loss in this case would be 0.9205. Take profit is 0.9125, 0.9080. Then for our buy, entry price 0.9205, or stop loss is 0.9157. TP1 is 0.9225. TP2 is 0.9280. So in this case, USD CHF, guys, the pip is gonna be 1, 2, 3, 4 decimal places. So we done the sell. No, 0.900 is take profit 3. So so he's giving it 3, 2, 1. So take profit 1 is 0.9125, and you can see because this is closer to the entry price. So this is literally what? 32 pips. And I just gave you guys the answer. Like I said, you get the eye for it because you're looking at the fourth decimal place. Daniel, man, stop confusing people. What's wrong with you? Yeah, he gives it backwards. So it goes from TP2, TP3, TP2, TP1. I don't know why he does that, but yeah, just remember that. So if you put in the first one, you're gonna get TP3. It's fine, bro, it's fine. I'm just troubling you. Yeah, obviously with more practice, you get better. So that's why I say it's really, really good to write it down just like this. You're outlining your buy with the parameters, writing your risk and your reward and doing the math. Yeah, that's what they do. Arabs, man, Arabs. All right, so for our risk, I got 32 pips. I lied, yeah, 48, yeah, you guys are right, 48. For reward, for first TP1, correct. And our TP2, nice. So you guys understand we're risking $48 for $32.77. So that makes sense. It's not too far off, it makes sense. Like I said, I put in that trade and I think I made $150 with the allocation that I was using. Nice, so you guys are getting it. So really easy to do, guys. I thought this channel was very complicated, but it's really not. You just got to understand the basics. This is why we spend so much time, you know, ensuring that you guys understand the basics before you even go live, because you want to understand how to do this simple analysis so that way you're able to filter out trades, right? Because if it was something like your risk is 48 pips and your reward is like 10, it don't make no sense, right? So hopefully you guys understand that. And for everybody else that wasn't participating, I hope you guys get it, right? If you don't get it, please speak up now so I can address. Okay, so I'm gonna assume that we're all good. So we understand how to put it in. I'm, you know, expecting us as a community, when the trades come out, we're gonna be inputting it and sharing with each other our results. And we'll, you know, obviously see how it goes. So you think we should always translate every time it comes? I mean, yeah, you can translate if you really want to see the full out thing, or if you just look at the numbers, you can understand if he's buying or if he's selling. Because I don't always go to Google. I go to Google the first time just to see what it means, and then I understand, okay, every single time it's the same format. So I know there's two trades in one alert, understand if he's buying first or if he's selling, excuse me. So if he's selling, I know the second trade is gonna be the buy. Could you please explain what happens to the bottom values when it reverses? What becomes the SL at this time? So personally, I'm putting the SL in this case as the first entry price. So if we're looking at GBP JPY and this is a buy, the stop loss for my sell is going to be 139.23. Hopefully that's correct. Good. So this is just, you know, like I said, the trader is not using any stop loss, but personally I need a stop loss. I'm not always watching my phone. So if the trade reverses, I want to know that I'm capped out at something that I'm comfortable with and the sell starts to run.